Hi everyone and welcome back to today's morning report. Charles Appraisals on Tuesday 29th of March with me, Rich Perry, market analyst at Hand Tech Markets. Let's look at dollar yen, and well, we've still got this climb, haven't we, on dollar yen, this recovery with the dollar strengthening over the past week or so. Yesterday's candle, interestingly enough, across the forex majors the dollar was weaker, but yesterday's candle on dollar yen was stronger and continued to drag this recovery. Now this recovery has gone further than I thought it would, certainly much further than I thought it would actually. I thought that it was going to be sort of just being a bit of a dead cat bounce, and I took that that candle there, that doji candle, as possibly the end of the move, but it's just kept on going higher, isn't it? And the dollar just doesn't want to give up these gains that it's made against the yen. And it's interesting that we are now coming up towards the resistance, the overhead resistance band. Now, you've seen that coming in. 114 figure is where we start to really see the overhead supply coming in, because 114 figure is a point at which we see all these intraday moves above, but never closing above over March. So 114 figure is a really interesting area of resistance, and still seems to be, I think, a point at which the selling opportunities will arise, because I don't see this as being a base pattern. I don't see this as being a pattern that's going to break above the 114.87 level and push higher. I think this is going to be another sort of, or at the very least, I think it's going to be a continuation of this trading band. Now, we have got the daily RSI, which is actually the highest since early February, but still, that is I mean, that's a positive indicator, yes, but I still see that the MACD line's just unwinding back towards neutral, and I think ultimately it's going to just play out as just an unwinding move, and I think it's just going to continue to play out this this trading range, or even possibly have a downside break. But I don't see this as being an upside break move, so I'd be looking out for the next selling opportunity. I think it's likely to come around the 114 area. You've got the resistance that starts to come in at 114, that reaction high there on the 14th, and then up towards 114.55, which was that reaction high on the 2nd. So throughout March, between 114 and 114.50 area, there's a great area of sort of overhead supply that I think will ultimately prove too much and likely to provide the next selling opportunity. So having said that, though, you've got the 55-hour moving average, which has become a really good basis of support since this market turned around, since it turned the corner. That red line there, currently at 113.32. Now, 113.15 was a pivot line support, pretty good one as well. Didn't act necessarily so well mid-March, but prior to that, it was a very good turning point, 113.15, and also overnight. You can see here it's pretty much acted again, rallied towards it, started to consolidate, broke above it decisively, and then used it as the basis of support again. So it's the basis of support once more, 113.15. And below that, you're looking at 112.20 as your sort of pivot line support there. So a few levels for you to work with, but for now, certainly this recovery continues. But I think overhead supply around the 114 mark is going to be a difficult barrier to breach. Anyway, I wish you good luck in your trading today, and I'll speak to you again later.